You're probably tired of getting chopped up in bad price action and absolutely nuking your funded accounts whenever ES and NQ are moving side to side like this, presenting zero setups. In today's video, I'm going to show you guys how I was able to rake in over $3,000 in realized gains going elsewhere instead of trading this abomination. So let's get right into my process for scanning good setups outside of futures and how I'm able to capitalize and make a ton of money even on the days when the broader market, the S&P and the NASDAQ, are doing absolutely nothing. Now, before I get into the chart, here is the proof of the gains: common stock purchased and options that ran over 300%. So once again, the purpose of this video is to show you guys that even using my STIM model, the sweep, tap, inversion, momentum, which I will start to highlight when we go over this chart, it's possible to catch amazing trades even when ES and NQ, which are my preferred assets, aren't cooperating. So we took a very, very profitable trade on ASTS. Okay. Now, the reason I wanted to take this trade was based on my STIM model. Okay. So we had a tap into this higher time frame fair value gap, right? We're in just this overall bullish imbalance and we are starting to reverse. Okay. So this entire thing, you can mark it out as a bullish imbalance. And we did have a liquidity sweep. Now, it's not how you guys might classically think, but one tip I want to give you guys, because I have been trading my STIM model on common stocks, right, as well, instead of just ES and NQ, is that you don't actually need a traditional liquidity sweep in the sense you might be thinking, right? So right here, you could say, okay, look, we've swept liquidity, right? This is a low. Well, we don't get a reaction off it, whatever. Now, if you notice, I'm going to show you guys where I entered, which was right after we inverted this 4-hour bearish fair value gap. So on this candle right here, and you can see that we didn't actually sweep any obvious swing low in this move, right? We had this low right here that you might be thinking, why didn't you wait till we swept that? Well, there's a certain tactic you can use on common stocks to replace the liquidity sweep aspect, okay? And that is whenever a commons gap gets tested and held. So right here, we have a gap in the chart, okay? And this happens on common stock, right? It doesn't trade 24 hours like, well, it does. There's overnight markets, but they're very low volume and not really worth paying attention to. So with futures, you know, they trade 23 hours, but with common stock, if you're just looking at a daily chart, you're going to have gaps like this. And what happens is oftentimes those are going to be levels that need to get retested. And once those get swept, that's when you can expect a reversal. So if you're trading my model on common stock, so anything, right? Like ASTS, NVIDIA, AMD, Tesla, you can, whatever, just stocks, right? If you're trading my model on stocks, you can count a gap fill or a gap test, a common gap like this, as a liquidity sweep, okay? So once again, this is your liquidity sweep right here. So that's the sweep. We've obviously been trading inside of a bullish imbalance this entire time. So that's the tap. And then you see that we have a very clean 4-hour inversion right here. Okay, so this is the inversion. Now let's look. 1, 2, 3 straight green candles above and through this 4-hour bearish gap, which tells us that there's very good momentum behind this move. Okay, and the momentum part is important because if we're chopping in this range forever and then we just get a very slow crawl up, your continuation is not likely to be as good. So when you have a bearish gap like this that held before, then you come back down and then you make a huge run through it that's very bullish, that looks way stronger than the last time you tested it, that's going to be a signal that the stock is actually ready to reverse. And obviously, if you guys watch my other videos, this is the same exact model that I use on the 5-minute chart, the 2-minute chart, the 1-minute chart to trade ES and NQ every day. But like I said, this week, I didn't personally find many great opportunities on ES and NQ. There were some, but it gave me a lot more time to focus. And I'm going to get into how I find these setups to begin with anyway at the end of this video, right? So anyways, just know ASTS had been on my watch list. We get this inversion right here, and then it's pretty simple, right? My first trim target for shares and options is up here at 65 bucks because we have, what is it? A daily bearish fair value gap right there. And that's going to act as a draw on liquidity as well. And then the final one, which is a very important as well, is the 72 range. And this is actually where I ended up exiting my entire position. So I'm out of this trade now. The 72 to 73 range is where I ended up holding my calls till, most of my shares till. And that was the target, right? Because that's a massive daily bearish fair value gap, and you can expect that once again to act as a draw on liquidity. Now, the other reason I liked that was because of the fib retracement. So if you guys are familiar with the concept of discount and premium, this was basically in the equilibrium of this range, you know, trending towards premium, right? So you go from the swing high to the swing low. And I knew that with this daily bearish gap coinciding with the premium of this range, I figured that that would be a good spot to target, okay? So that's the trick with these. You don't want to try to overstay your welcome. And some might even argue that looking for 72, 73 from 57, 58, which is where I got in, is overstaying your welcome, right? Because that's, you know, if you do the calculation, about a 25, 26, 27% gain. So anyway, I enter this trade, right? And look what happens. Next 4-hour candle, we have a 4% rally. And then the next day is when it just explodes. We get a clean delivery all the way up to the bearish daily gap that I was targeting, which is crazy. It happened in one day. Now, I will be full disclosure. I like swing trades with this model, the STIM model, right? So I'm not exactly expecting moves to happen this fast, right? I would have been fine holding this for over a week, but it happened in one day. And I cannot say I'm that surprised, right? I mean, I was a little surprised that it happened this fast. But in reality, moves with great continuation like this can be expected when we absolutely charge through a bearish gap. We're showing exhaustion. We've swept out the liquidity in terms of the commons gap. And then we're also playing inside of a bullish imbalance. Okay, so when you combine all of those factors, you can't be surprised by extreme mean reversion moves like this, right? The other thing that helps is that we had been trading in a very deep discount of the prior range. So if you look at this last leg up right here, right, from the swing low all the way to the swing high, you can see that we were in deep discount of this range, right? We were by the 0.7, 0.8, right? And even if you take it to this swing low, it's even farther in discount, right? So that's the type of trade that I'd be happy to take. I was happy to take and ended up playing out perfectly. But like I said, understand the reasoning behind this trade. Not only did we have a massive charge, we were in deep discount of a range, and we had a massive daily bearish gap that had yet to be retested at all, right? Like notice how this gap gets put in, right? One candle, gap candle, two candle, no other daily candles have even tested this. So I had a hunch, and this was why it was the target, right? Because the gaps, the fair value gaps are a draw on liquidity as well. That's an underrated thing that people don't tend to think about sometimes. Everyone just thinks about fair value gaps as places to catch a bounce or a reversal. And they forget that fair value gaps are one of the greatest things to target, especially when they're massive and obvious like this daily one right here, right? So that was it. You got the sweep, which like I said, this is a huge tip and maybe the only time I'll ever say it because I mostly make futures content. But whenever you have a commons gap like this, you see the gap in the chart between the daily. If you take that out, that counts as a liquidity sweep by the way I trade this model when it comes to shares of stock that don't trade with high liquidity 24/7 the same way futures do, okay? So that was the liquidity sweep, right? So there's no swing low here that we took. It's just the commons gap that we filled. Next, you want to tap. Well, we've been trading inside of a mega bullish imbalance this entire time. You have this this bearish gap that we put in on the way down to invert. Then the other thing that's helpful about this is we have this rejection of the 4-hour bearish. We put in a higher low, and that's usually fairly good to see once you invert. That can help you confirm a bottom actually is in the near term, right? You don't want to take a trade, you know, down here just because you think it's not going to go back to that low. No, but like once you invert this, which we did right here on this exact candle, you can use that higher low as additional confluence to say the downside might be exhausted at this point. And once again, you want to have clear targets. What is this? It's a fair value gap. It's a bearish gap, but more importantly, it's a draw on liquidity. But as you can see, we just absolutely displaced through this. So this gap never ends up even mattering. We just displaced right through this. This was a plus 18% candle. And then once again, we make our way to our final draw at 72, and I am all out of this trade by now. I am all out. It took me less than 24 hours, because this was the first candle of Thursday and I entered Wednesday right here, right before the last 4-hour candle of Wednesday. So like I said, over 330% or around 330% on my ASTS calls, which was like $700 into 2.3K. And then I ended up flipping about 6K into like 7K, right? And that was off the shares, which I also put up. You know, one man's junk can be another man's treasure, right? Everyone on Wednesday, when I entered this trade, was spending their time complaining on Twitter and, you know, all the social media apps where trading communities exist. They all spent their time complaining about this price action, right? Just this flat, mundane, no good setups type of price action. And instead of complaining about that, I said, all right, well, let's look for other opportunities. And that's where my routine comes in about scanning for setups. So I have this watch list right here. And it's really simple. It's just all of the big tech, most hyped up stocks. I'm on X a lot. So I see a lot of tweets about stocks and, you know, what's hot, what's hyped. I know what people are trading. I look at options flow, so I see what stocks are hot in terms of options. So I have probably 100, 150 different tickers here that all have decent volume, popularity, and options liquidity. And what I do once or twice a week personally, and the more the better, I guess, really. But what I do once or twice a week is I go through every single one of these stocks and really take the time to look at the setups and to look at what looks like it's going to break out, what looks like it's putting in my model, right? Because I look for the sweep, tap, inversion momentum. And I have this list here, STIM, right, where I actually put the assets that look like they're really close to completing it. So I have this separate watch list, right? I have this watch list where I just look at everything, and then whatever looks really good on this, I put into this watch list my STIM. And that's where I had ASTS, and that's how I caught the move, right? I would not have caught that move if I hadn't scanned, if I hadn't looked, all that stuff. So it's very important. I would have missed out on over $3,000 if I didn't take 1 hour of my time to scan setups on Sunday night and Tuesday night, right? $3,000 for spending a few hours looking at setups. That's pretty good trade-off to me. And so you can see with Tesla, I had this marked out too, and I took a play on this as well earlier in the week. I'll put up a screenshot if I even have one of that position. I had shares, I had calls. It ended up running about 100% for me. It was more like 80% maybe. But once again, look what we have. We have all these lows inside this range. If this line could even draw itself, right? We have this low right here. We have lows inside this range, okay? What happens? We come down, sweep them, look at the higher time frame. What is that? That's a 1 month bullish fair value gap on the 1 month chart, okay? So we've swept internal liquidity. We have started to deliver off a monthly bullish gap. And what happens? You go to the 4-hour chart right here. And you can see, if you turn on extended hours especially, that we have a great inversion. Okay, so this is a huge bearish 4-hour gap. I'm going to delete the monthly gap because you guys want to be able to see this one. So this is a bearish 4-hour gap, right, that we put in. We have 2 strong rejections of it, okay? So we already know that we've rejected it twice. When this finally gets closed above, expect a very strong continuation because it was so strong in the past. So buyers must have been very aggressive and active to push it out to begin with. So once again, once we hit that, you know, once we push through and get an obvious close above it, I'm long. I take calls on this candle close, okay? And we let it ride. Now, my target for this one, I believe, was this swing high right here. It was around 440. And I need to look at the daily chart again because I'm kind of forgetting, but I think there was a bearish gap. No, it wasn't a daily bearish gap. I think I was just taking off profits there because that was the local swing high. But anyway, I was targeting 442. And we ended up getting a move to it. It took a little while. This one chopped around for a few days, but as you can see, we had a very, very nice move here. Now, I could have definitely started to add or keep my position once we inverted this 4-hour bearish right here, but the way we rejected that high when that 4-hour closed, I remember getting out as a result of that. And not to mention, if you look at the general range we were trading in from previous recent swing high to swing low, we were in premium, well into premium. And whenever that happens, like I just discussed with ASTS, I like to take risk off. So That's another example though of this model working perfectly. This shit is nails, right? It does not matter if it's on ES, NQ, Bitcoin, Ethereum, Tesla, ASTS. Like, this works on shares. And I need you guys to understand that, because once you understand that, you're going to open yourself up to so much more opportunity. And you want to have opportunity in this market, right? Like, we spend our days trading, researching the market, trying to improve our edge. And if you have a model that you really trust, then there's no reason to stray away from applying it across different assets. Now, the reason I say that is because there's many times where you might not find sufficient price action in ES or NQ. And a lot of people use those periods to take a break from trading, which is awesome. And I'm able to disconnect when I need to, right? Like, if I have a pre-planned break, or if I'm on vacation or doing something else that's really important with my time. But in all transparency, like this week, I really wasn't doing shit else. So I had time to scan, I had time to look. And like I said, I also like swing trading a lot. That's how I started trading. I was first a swing trader. Now I mostly day trade futures. But when I see my same futures day trading model appear on a common stock, right, like Tesla, ASTS, and I can get shares or calls and bank off it, I will absolutely take that opportunity. And like I said, if this was a different time frame on ES, say this was a 5 minute, 15-minute fair value gap, and I look down at the one now, I look down at the 1 minute chart, and look, oh, we're delivering out of this 5 minute gap, and look, we just had an inversion. I would take that every single time for longs. So if I see the same exact thing happening on a very liquid stock like Tesla or ASTS, where I can trade options with small spreads, I can get shares, I can get leverage shares, and I can easily set targets and stops that are very obvious based on the chart, why wouldn't I do it? Right? And so I just wanted to share this for educational purposes, because I know a lot of you guys watching might have noticed how rough the price action was this week for the most part on ES and NQ. Don't get me wrong, there were some very solid setups, but a lot of you guys probably noticed that. And I wanted to make this video to just help you gain a new perspective on what you could possibly start doing if you want to find more opportunity and you really like trading this model. Okay. So with that being said, if you are still watching, you're probably very serious about trading. If that's the case, make sure to like the video and subscribe. I post a ton more educational content all the time that's always aimed at helping you guys out and documenting my journey, being transparent, all that stuff. I believe in all of it, and I thank you all for watching. And also, this is going to come out before my 1K special. So thank you for 1K. I really appreciate that a ton, guys. It's made, life a lot more fun to build a presence on social media. And I have my subscribers and supporters to thank for that. But like I said, 1K special is coming up in the next day or 2 or 3 from the time of this being uploaded. Depending on when you're seeing it, maybe it's already out. But like I said, yeah, I appreciate you guys all for watching. If you're interested in joining my free trading Discord, it is linked in my YouTube bio and in the description. So I appreciate you all for watching. I'll catch you in the next one. Peace.